What's up, everybody? I want to go over a concept today that can help you find high probability entries without needing to use any indicators or fancy techniques or anything like that. So this is simply called point of control. And what it is a method of determining where institutions are buying and selling shares, right? So, institutions, the biggest shareholders in the market that have the most sway over price and how it moves and how where they are buying and selling. Because if you trade in line with institutions, you're going to be profitable. And this is a lot easier than it sounds. Okay? So, let's take this. I'm going to delete these boxes just for the moment. So, right here, we have a significant downtrend, right? And this is on a higher time frame. This is on the 6 hour. So we have price that is moving very obviously bearish. Okay, and it's continuing, it's continuing, it's continuing. We find the moment that something changed, right? We find the moment that volume shifted. And that's this blue candle right here, right? So this was the first point that a low was struck and that low was respected. Nothing broke below that. So we're going to take this box and we're just going to highlight that candle. Okay. Now, as you can see, it was respected once again, once again. So what this represents, this specific candle, is where price got so low that institutions that were selling shares from all the way up here started buying back their positions. It got into a position where their shorts were profitable, so they wanted to start buying it back. Now, again, all you're looking for is a candle that is the first point that the trend has reversed on itself and actually held that volume, right? So this one right here, this is different. See, because we have this blue candle, but then look, it was disrespected by this move. Or we have this blue candle, but it was disrespected by this move. So this is the first one that it was respected. Price did not go back below that, right? And then we have this essentially higher low right here to say, okay, we're moving up. This is the in that you could consider this right here the imbalance. Okay, so we have this space right in here that is how much volume was pushed off of this low. And that means that there's a whole lot of short orders trapped in this general area. Typically, like I said in this first candle, I like to highlight that. I think it keeps it nice and concise. But up to this area, there were a lot of people that were short selling. There were a lot of stop losses, probably up above in this area as well, up above these prior highs. So, given that, this gives us a clean area of recognizing where institutions are buying and they want to hold their longs above that. They don't want price to go back below this, right? Because they would lose money if they were holding longs right there. So again, the next time price actually reached this zone, look, it was respected with a higher low, with a higher low. We never got back below that, but we came back to test it, right? So I want to show you, this is an interesting example on the highs here. So you have a similar thing happening here, and obviously this is very range bound as opposed to this trend that was happening here. Actually, this is a good example. So here was the high, and we have the same thing happening. Look at this black candle. So we take that, and we didn't even get close to coming back up there, other than we consolidated in here, reached about that 50% point, and then dumped off. Well, we got back into these lows. So again, just to reiterate, we have the highs, we have the lows, and now I'm going to highlight the range that we've been playing in right here because this actually gives us a bit of a consensus or a bit of a higher probability that price is going to do a certain something this week or next week. Okay, so we have that black candle. I'm going to take this across. And this was the original point of control within this range of where shares from the low that we just highlighted were being sold off. Okay, so shares are being bought up right here. Shares are being sold off here. Shares are being sold off here. Now, as you can see, I mean, look at the volume of these moves. Like, look at how strongly price is reacting off of these moves, okay? So again, we came back down here and then higher low, higher low. We never got back to it. We just retested it and brought it back up higher, and then we came into this zone here. And this is where I would add a secondary point of control. See this large black candle right here, this large bear candle, right in here, okay? So that is showing where volume is shifting, right? So we're having price sell off right here, we're having price sell off right here, and then all of a sudden the point of control changes, and now price is selling off lower, lower, which tells me, especially after this move that just happened, where we came back and respected this, right? We'll highlight these 2 points right here. Boom, boom. So that tells me that it's more likely that price is going to come down and actually retest this again, if not break this and move into lower lows, right? Because what we're seeing on this top side right here is the same exact thing that was happening down below right here, right? So we have this point of control, price coming up, consolidating, taking stop losses up in this area from everyone that was selling right here, right? For everyone who's taking short orders, they were putting their stop losses probably just above these specific levels. So price coming back up in here, point of control, point of control, point of control moving lower. And now all of a sudden we have a lot of people that were buying up in this area, right? Which means stop losses are probably going to be set below these significant levels. But this is the same pattern playing out on both sides of the market. We have the significant low, the point of control, respected, respected. We have the significant high, point of control shifting lower, and then coming back into it, respected, respected. So I don't want you to necessarily look at this like a pattern per se, but just recognize where these candles can show you how institutions are trading. They can show you where institutions are actually holding liquidity and they don't want those levels to break for XYZ reason. So, and again, this is not financial advice, but perhaps something like this, and then an actual dump down into here. Who knows? That's a potential, all right? And what this is going to give us, these point of controls, is essentially being able to look at these potentials. And instead of looking at this range, which this is a nice, I want to say like 400 pip range, right? A lot of pips. Instead of looking at that as like, say it's a 50-50, we go out to the top or the bottom, we can say, okay, do you see how volume was here and then it shifted down to here, and now we can say that it's more likely the price is going to come back down here. So say you come for a setup right there, you enter into short position somewhere around here, take the range, nice 1 to 7, or it's like, depending on how you want to do that, you probably go to the lower time frames to actually get a cleaner execution. Be a lot better, but I just want to focus on this higher time frame for now. Watching where this point of control is and actually recognizing how volume is moving throughout the markets, because right, we have a whole lot of volume happening here, we have a whole lot of volume happening here. Price is trading lower and lower and lower. Price is getting squeezed into these lower levels. So there's always even a potential that it comes back and tests this again and comes back into here and then dumps lower. But again, there's also a potential that price comes up into here, tests that, and then comes into these higher highs. But I think that is less likely for the reason that we're seeing this volume shifting through here. Okay. So again, this is not financial advice. That could absolutely be wrong, but it is just a way to look at the markets and recognize where you can accurately assess where what a lot of people call support and resistance, right? It's a lot of times the support and resistance, what that actually is where large institutions are holding most of their shares. Where they're holding most of their shares, that's where price is going to find support or resistance, because there are people in the market that do not want price to cross that zone because they're going to lose money. That's all that is. Accurately defining what that is, given, like I said, we have a major bull run, and you see the first candle that went against that, and then nothing broke above that. A major bear run, you see the first candle that went against that, and nothing broke through that. That's just an easy indicator to determine where shares are being bought up or shares are being sold off. You want to pay attention to that. So, with that, I wish you happy trading. Again, this is not financial advice. I'm just trying to provide a model here for something that could be a high probability setup. Obviously, we're going to see the markets are going to do what they want. But with that, I wish you happy trading and I hope you learned something from this video. Peace.